Okay, traders, we're going to talk today about when should you lower your size. So, why are we actually dealing with that? Well, that's because many of our trades are just going the wrong way, or sometimes they're going the wrong way, or sometimes they just don't do what we expected them to do. The problem with us human beings is that we hate to admit our mistakes. I mean, when's the last time you admitted your mistake? Especially me, when I've got like 2,000 people watching down my back when I'm trading stocks, with people watching how I'm doing. I mean, it's not easy. If you thought it is easy to trade with a few thousand people just watching and thinking every minute if you're making money, losing money, and you need to prove yourself, well, tell you what, it's not easy. But let's not talk about me. Let's talk about you. Do you like to admit your mistakes? Like, let's just assume, I'm not going to talk about trading. I'm just going to start with something as simple as buying a new car. When's the last time you bought a car? Did you buy a good car? Did you like your car? What happened when your friends asked you whether you like the car that you bought? Even if you think it's a really bad car or you didn't really like it, you're not going to say, I just bought the world's shittiest car. I just bought something that I made a big mistake. I just lost so much money buying this car. People always like to justify what they're buying. Now, in the real world, just like in the trading world, we do not like to admit that we are wrong. The thing is with stocks, you're not supposed to get married to them. You're not supposed to hold stocks for the long run. You're not supposed, when I say long run, I'm meaning when you're day trading them. I'm not talking now about investing in stock because we're talking about trading. I mean, certainly that's not my style to hold stocks for days or for weeks or for months, but I'm just talking intraday. If you took a stock intraday and something goes wrong, and let's discuss what goes wrong. So I'm going to go through two examples here, which we traded in the trading room. So if something goes wrong, you shouldn't keep holding if you think that something is going wrong, or you should, in other words, admit that you were wrong. Stocks are to be dated, not to get married to. Once you've got yourself something that's going wrong, cut the relationship. Cut it clear, cut it quickly. Don't continue holding to something that doesn't go the right way. Sometimes you consider it right at the beginning. Now, I know it sounds quite simple. I mean, why should you let it go? I mean, you just moved into a stock, it's not doing anything. Why should you let it go? Well, the answer is very, very simple. You just need to admit the fact that you were wrong. It's not easy to admit that you were wrong. Now I'm going to give you two examples. Here's one of them. We're looking at Snap here. That was a few weeks, maybe a month ago. I'm not sure. Yeah, approximately a month ago in the trading room. Snap finished, as you can see here. Let me start with my marker here. Finished the previous day somewhere near $12. Opened up around $15. That would be like a 25% gap up. So a huge gap up in Snap. Initial move is down, then it started to move higher. What are we seeing in this example? Can you please help me? What is there? I mean, there's some kind of a trading system here that I see, which is very, very clear, very, very simple. We discussed that plenty of times in the trading room. Gap and go, exactly. So we're seeing a gap and go here. When the stock is gapping up more than 3%, it usually means that it's going to continue higher. Why is that? Institutional traders are not involved over stocks that are, most of them are not involved in stocks that are gapping up more than 3%. And that means that it's all in the hands of the traders, investors. Actually, very, very small part of that is traders, us. The vast buyers would be the long-time investors, and we're just a very, very small part. But the thing is, people love to buy stocks when they're gapping up, and since there's no institutional traders to take them down, you know, they make money from closing the gap, but we're not going to discuss that right now. Then it's very, very likely for the stock to continue higher. Why? Because people love to buy stocks when they're up. Now, beat me if I know why. Like if a stock is gapping up 25%, Snap, whatever, doesn't matter which, gapping up 25%. I mean, personally, I would just run away. If I would have held it, I would take my profits, whatever, but I would definitely not go long. But the thing is with stocks which are gapping up dramatically is that people love to buy them when they're up. People love to join stocks which are winners. People love to join stocks which are gapping up, and they usually drive them higher. So what we're seeing here is a very good example for a potential gap and go. So I'm thinking I should go long over 1550. So we've got a very nice technical formation here. Again, started with the gap up, came down a bit, moved higher, pulled back down. Now going up again. These are 1 minute candles, so we're talking into like what, the 7th minute here. So still a lot of volume, still a lot of momentum. I mean, just take a look at the volume right over here below. So nothing wrong about this decision. You want to buy a stock where everybody is buying, where the greed kicks in. You want to be there, you want to be a part of it. You just don't want to get married to it. I mean, you don't want to go sleeping with it. You don't want to hold it over, I don't know, sometimes a few minutes, sometimes a few days, a few hours. But basically, the first push up is the push where everybody's supposed to join and help you. Now, let's just assume that my entry point should be 1550. Where would you put your stop? If you don't mind just writing down. Previous support, as you can see here, if I'm going to mark this point over here, that would be 1520. So that right over here, that's 1520. Where would you put your stop? I mean, the low of the candle is 1520. If I remember correctly, it does not matter if I'm wrong a bit here or whatever, but I think it was 1520, yeah, sure. So where would you put your stop? If I bought it at 1550, this recent low here is 1520. So you're saying 15. Now the low of the day would be around 1475 or so, I guess. 14.99. Well, if you say 15, then certainly it should be 1 cent below, because that should be the whole number. It may protect you. 15.19, 15.20, 15.19. I personally think that I agree with many of you guys which said 15.19. Well, 15.20 would be the recent low. You want to give it like another cent or so. You want to give it like another cent. That should be the point where you should move out of the trade. So I'm looking at a trade where the entry should be 15.50, stop loss around 30 cents. Now, of course, it's a bit more. We always have to remember that when you have a stop loss and when you have an entry point, you always buy a little bit higher and you always sell a bit lower than what you've got. So this could easily be, instead of 30 cents stop loss, this could easily be something like 35 cents, possibly a little bit more. But that's approximately the idea of where the stock should be sold. Now, there's another way of looking at it, and before we continue higher, let me just paint another line here. You always need to remember that when you take a stock and you expect it to move higher and it fails, to imagine the point of your stop loss. For example, let's just imagine it's working out at the beginning. I'm painting a line now, and then it did not get to your target, and then it starts failing and coming down and coming down and coming down. What would be the point where now, after looking at what it has done, would be your stop loss? What would be that point? You see, initially you think, well, if it would have moved just 1 cent higher, my stop should be at around 15.20. But what happens if it moves like 20 cents higher? Where then should be your stop loss? Should it be your entry point? Answer, no. Why? Because your entry does not matter to anybody. Nobody cares about your entry point. The market doesn't care. Stock doesn't care. We don't care. Nobody cares about your entry. So there's nothing with entry. I'm just saying this because I know some of you thinking this way about putting a stop at your entry point, so I'm not going to lose anything. Well, spikes will take you out. I mean, very small intraday movements, actually, not really spikes. They could take you out very, very easily. You're not supposed to be putting your stop. But what you should do is really look at the point of no return. I would call it, in this case, I would say somewhere around here, even before 1520, above 1520. And why? There is a point where you see the stock coming down and you could think, well, that would be the point where it's more likely to continue down. I would call it the 80% point. The 80%, and again, we're not going to discuss that right now. I'm just mentioning this. The 80% point should be the point where you think, well, if it gets there, there's like an 80% chance, in your opinion. Well, if you're just starting out, you're a novice trader, you don't really know what is your opinion or not, if you're right or not, but you build up this feeling, you build up this notion of, well, if it's going to be there, it's probably going to come down, continue coming down. This is something you need to build, but this is something you need to practice as well. So where would be the point of no return? The point where like 80% chance is going to continue higher. Of course, like 20% is going to shoot higher and you're going to be extremely sorry you didn't hold for it. But basically, I would say it probably could be over 1550. Well, let's see what happens next, okay? Let's see what happened next. So I went long 1550. My expectation from Snap over 1550 was a quick move up. I mean, the stock is up 25%. There's a huge volume going on. There's a very nice technical formation. And again, I'm saying quite clearly right now, looking at this back weeks ago, it was the right decision to go long. You expect it to move strongly higher. Well, that did not happen. As you can see, it moved up just a few cents and then just continued higher. And there's another very bad sign there. What would be the second bad sign? I mean, the fact that it just failed here, right over here, that would be the first bad sign. Where's the next bad sign? And then, of course, just went sideways. And then, of course, just went sideways. So if you look at stock, I was expecting it to race higher up to the sky, and it just moved up a few cents, started going sideways. The volume. Actually, no. You know, once it moved higher, look here. You see that? If I go down, the volume spiked here. So the volume was right. There was nothing wrong about the volume. Volume was right. And when the stock is going sideways, you actually want to see lower volume. And then you want to see another the volume going up when it moves up to a new high. And look at this volume bar over here. There was a high volume here. You see this topping tail over here. Just remember, this topping tail took the stock to a new high. So you're saying the fourth low range candle. Well, okay, so it went sideways, right? But I really want to talk about this candle here. Look at this topping tail here. Just forget it is a topping tail now. Just think about it. This was a green candle. Stock moved up to a new high. And although it moved up to a new high, that was just a few cents higher than the first high. And then it came down. It actually kind of spiked down even right after moving to a new high. I mean, what does that tell you about Snap trying to move to a new high? It just tells you, really, it just tells you that there's a big seller out there. There's a lot of sellers out there. So I don't know who they are. I don't care who they are. Snap tried to move higher twice and it failed. First time it tried to move here. Second time it tried to move there. I don't care about the technical formation. I don't care about the name you give it. I mean, just think logically. You're looking at a stock that's supposed to go sky high. This stock is up 25% by the time it reaches it a bit more. So, and there's a high volume on a breakout, but then it leaves a topping tail. One of the strongest ever reversal formations for a stock that is moving, for a stock is a stock that is moving to a new high, or actually the same opposite side when it's moving to a new low, and then it fails and comes down from there. So when you see a stock that is failing to move to a new high and leaving a topping tail, this topping tail at the top is one of the world's strongest reversals. So the question, what do you do? What do you do when you see something going this way? I mean, stock's definitely not doing what you expected it to do. Failed to move higher for the second time. Spike down a bit, now you're in red. Getting back to green territory. What do? Get out. Stop the trade. Any other idea? Reduce. The topic of our lesson. Right, you're right. Close the position. Well, tell you what. You're right. Yeah, absolutely. All answers are correct. Actually, the best answer would be close the trade, get out. Follow the plan? Absolutely not, Alexander. I'll tell you why. The reason you're not supposed to follow the plan, because it did not reach my stop loss. Possibly didn't. I'm not sure here. I'm not sure. Maybe this one reached. I have my exit point soon. I'll show you. But anyway, look, the stock is just going sideways. All along this line over here, stock did not hit my stop loss. Did not hit my stop loss. Am I supposed to stay in and just wait for it to hit my stop loss or move higher? I told you earlier about getting married to stocks. I also mentioned the fact that people don't like to admit that they were wrong. I mean, I was wrong. I expected it to move higher here. Okay, so I held a few more minutes. Then it failed once more over here. You see, I was wrong. If I was wrong, I'm supposed to admit the fact that I was wrong, and I'm supposed to close down that trade all completely. I'm not supposed to hang on to it. I could be a few cents higher. I could be a few cents down, or I could reach my stop loss possibly here. Everything could happen here, but I'm not supposed to hold for the stock. Now, you need to understand the following, and that's a little bit advanced. I mean, that's the idea of these lessons. That's why we're doing this mentorship. The advanced part of this mentorship is that you will realize that targets and stop losses are not written in stone. There are things, there are points which you should consider at every given moment. You should consider your target all the time. For example, market changing direction, market's coming down. I don't know. You should consider your stop loss at any time. You should consider your stop loss based on the behavior of the stock, based on the behavior of the market, based on the behavior of whatever, based on announcements in the market, whatever's going to happen. You should consider all the time your targets and your stop. The problem is, when you're just starting out, this is quite a hard rule to give you right now. If I'm saying you should consider everything all the time, if I'm like if I'm like giving you a free hand right now, well, I'm not your big brother, right? I'm not the one to give you or to take or to then deny it from you. But the thing is, as your educator, if I'm going to tell you, well, it's all right, when you're starting out, just change your stop or change your target. When you're starting out, that's going to be tough on you, because then you're going to do it as you feel, and the way you feel is really, usually when you're just starting out, that's a problematic thing to say to you. So in fact, when you start out, yeah, have your target, have your stop loss. But I'm talking about a few months later. I'm talking about when you finally realize what trading is all about. When you finally realize that trading is probably harder than what you thought when you just joined up. Well, at that point, you should be at the point where you should realize that stop loss and target may change. You know, for example, I usually say you don't move out on spikes. Like if it would have spiked down, let's say that this spike down over here would have reached my stop loss, okay? If it would have reached my stop loss, then definitely I would be out. If it comes down slowly, but if it spiked down, I would not be out. It's not a lesson about spiking up or down. We did cover that in other lessons, but I'm just giving you an example here so that you understand that things could change. Things are not the same. You need to, at any time, you need to reconsider your stop. There's not like a permanent stop or a permanent target. Just doesn't happen. Question here. Let me see. Where did you see the stock? Pre-market. I don't remember actually. I don't think I did, Elvin, because it's usually not the thing I'm doing. But technically it could have some kind of an issues in the pre-market. I don't usually trade pre-market. I don't usually watch pre-market. It has to do with some systems that are important, like Scott uses that quite a lot. I'm personally not quite using that. So anyway, I'm looking at the stock and I'm trying to figure out what to do. Another way of trying to figure out what to do is actually to ask the stock. Like treat it like a human being now. Seriously, I'm not joking. And I didn't lose it, although it may sound like it right now. Ask it. What do you want to do? Not joking. Again, I'm not joking. Look at it right here at this area over here. Maybe it came down, then it moved up again. Now it's going up again. Now it's back to your entry point approximately. You should pause right now and ask this person. It's not a person and it's not going to answer you if you were wondering, but ask it. Where do you want to go? Seriously, snap. Where do you want to go? Well, if the answer is going to be something like, I haven't really decided, because that's really the clear answer Snap's giving you. Snap's giving you an answer. I haven't decided. I don't know where I want to go. Well, I'm up 25%. Well, it's more likely, I'm going to continue higher. But I'm not really sure about that. So again, if you look at the stock and you're not really, and you don't understand what it's doing, ask the stock. It sounds funny, I know, but that helps you understand where the stock is going. So what are you supposed to do? I mentioned earlier, some of you mentioned, you should move out of the stock. Absolutely, I should move out of the stock. 100%, you're absolutely right. Can I do that? No, I can't. Why? Because I'm a human being. And because I don't like to admit that I'm wrong. And because there's 2,000 people watching my P&L now. And because I really want to have a winner. And because maybe I was down the previous trade and I want to make up for it. And maybe because, there's so many things I could say now. I don't want to move out. It's very, very hard to admit that you're wrong and to move out. Can you buy a car and sell it a month later? You were out. You were wrong. You bought a car. You don't like it anymore. Will you sell it a month later? Well, I'll tell you something. I bought this craziest car a few weeks ago. I bought this craziest car. It's an BMW 815M with a spatial engine. I mean, even not the standard M850. It's 620 horsepower, something like that. And it comes with I don't know, everything you could think about. I just wanted this car for whatever reason. And my friend told me, you're not going to last. Now, this friend of mine is driving a Porsche 911 Turbo, okay? So it's even more wild than mine. But anyway, this guy told me, he's a good friend of mine, he told me, you're not going to last. At this point right now, I know he was right. I'm not going to last. It's not for me. I'm looking for a comfortable car. I'm not looking for cars that by accidentally I just click the gas pedal and it ran like crazy and all of a sudden my water bottle is flying back seat. I'm not joking, it happened to me. So he just told me, you're not going to last. You ask me right now, do I like my car? It's the world's best. It's fantastic. I love it. I really adore it. I spent 200,000 euros on that car almost. I love my car. So you see, I'm not going to admit right now I don't want it anymore. And he actually came back to me 2 days ago and he said, well, if you're rethinking, I've got my friend who wants to buy it. And I said, you know what? If this guy's going to pay me, I just bought it a few weeks ago. If this guy's going to pay me very close to what I paid, I'm okay with this. I just don't feel like I want to lose money selling this car right now. You understand what I'm saying? Probably going to sell it, but I don't know when. until it comes to the point where it's really like too much for me. Like it's really like I want to change, I need to change, or at least I kind of justified what I did. I mean, the last time I bought a car like this, that was a BMW i8. I don't know if you know what I'm talking about. And it lasted for 7 months or so. So this one, probably going to last another 6 months or so. I mean, I guess best case scenario. So yeah, the i8 was an electric car. Kind of combination really. So you see what I'm saying? I can't admit that I was wrong. I can't admit. The way to solve that? Lower your size. That's it. That's the only way to solve it. Lower your size. So it actually tells you, and I'll go back to the demons. I mentioned the demons quite a lot of times. You know, the demon on your right shoulder whispering in your, actually shouting in your right ear, saying something like, you remember the last time you bought this stock, it didn't do much, you sold it, and then it went over the highs. It could have been like a crazy winner and you just wasted everything. And the other one says, well, yeah, but do you also remember the last time when you held to this stock and it just came down and crashed and you had a big loss? Well, I get to do something about my two demons, not just one of them. The one who says, hold it, continue. And the other says, be careful, it's going to come down. So the way to deal with that, sell half. I'm not talking about a partial, I would sell 3/4 or more. I'm talking about sell half. Sell half would quiet this guy on my right shoulder saying it's going to go high. Okay, I just left you a half, prove yourself. And this guy says on my left shoulder, shouting in my left ear and saying it's going to come down. Okay, I reduced my risk. Now, can I please continue? That's it. I need to take care of my demons. I need to be at a point where I survive this inner feeling of I cannot admit the fact that I was wrong. Is that easy? No, it's very, very hard. How many of you are doing that? When's the last time you did anything like that? Can you please admit the point where you took a stock, you held to it, you saw it's not doing anything right, and you kept holding to it? I mean, when's the last time you sold it? Near your entry, small profit, small loss. Did you ever do something like that? Yes, no, if you don't mind saying now. Did you reduce size when something didn't work out? We've got two heroes here. Lauren is a hero, seriously a hero, German. I'm just saying, I've got plenty of win. You did that? I want to have a poll. Hold on a second. Let's say it this way. In the last month or so, trading, did you reduce your size in a stock, of course, that didn't go your way? Yes or no? In the last few weeks, I mean, did it happen to you that you reduced your size? Like selling half or closing it down? I'm actually surprised. I'm seeing like 55% of you saying that you did reduce your size and 44% saying that you did not. I'm quite surprised. And really, that's great. That's great. If you can do that, that's great. I can tell you that it's definitely a big mistake that I'm not doing it more than I should. Now, the next thing you should ask yourself, are you happy with the fact that you did not do that to every stock that did not go the right way? That may have, should have been my question to you guys, but you understand where I'm going. It's very, very hard to reduce size. Now, in this case, I reduced my size right over here at 1547. Now, the thing is, the closer you are to your entry point, it doesn't matter if you're up a few cents or down a few cents, and I was just down a few cents. The closer you are to your entry point, the harder it is to reduce your size. Why is that? Because you say, well, I'm just down 5 cents or so. I could probably hold on a little bit more. I could probably hold for it to move higher. It looks like it's just about to do that. It was a little bit lower here. Now it's coming up just a bit. And well, I shouldn't. Maybe I should hold. Well, that's wrong. In fact, the best place to reduce size is once it's close to your entry point, and it doesn't matter if you're up or down. Then the second point where I reduced my size was right over here. Actually sold the other half right over there. Yeah, I think it hit my stop right there. Yeah, 15.19, of course. Yes, it hit my stop right there. So the end result of this trade was that my average price, my average exit price was 15.33 instead of 15.19. And that means that I lost, let's just talk about technically here, I lost like 17 cents instead of 30 something cents. On average, of course, on average. So I reduced my size quite dramatically, like that's, okay, 13, 3, 50, 17, yeah, 17 cents instead of 30 cents. I reduced my loss quite dramatically because I did have a stop loss. I don't use hard stops. That's again an issue for another lesson. I reduced my quantity here at 15.47 and moved out at my planned stop loss, which was 15.19. Now I'm looking at the trade right now, the way it looks. I did right. Stock is trending lower. Stock came down, failed to move higher, came down once, moved up, new low, lower low. Now we can see that it's kind of trending lower. Tried to move higher, did not move to a new high, and then moves to a new low. That was my previous point of support. I should have moved out at 15.19, but again, the average loss in this case was 15.33. Now don't get it wrong, I would have moved out whole size at 15.19, just that in this case specifically I reduced my loss. Now I'll go back once more to something I often say. When you're trading, in order to get the best risk reward, and it doesn't matter what's your risk reward, mine is 1-to-1. In order to get the best risk reward, what you should do is always think about the advantage of just a few cents. And again, I'll send you back to your trading accounts, and I would ask you, especially if you're losing, let's say you're losing for the past 3 months, 6 months, 1 year. I would ask you to just add 3 cents to every trade you took. Just look at the number of tickets you've got. Add 3 cents to every ticket you had in the past year.